Welcome traders to freetradingvideos.com. You're here with Breakout Trader. We're going to race through a couple charts here tonight, 5 in all, and just to provide some data to the markets. Right here we're going to look at the low of 2002 on the S&P weekly chart to the high of 2007 on the S&P weekly chart, and we're looking at Fibonacci retracements. What we can see is we had that 38% retracement. Market came down, bounced, we came back, tested, and bounced again. We had the double bottom. Now, the last couple of weeks we broke the double bottom, which is a major sign of weakness. It's not a positive thing at all, traders. Now, what I want to illustrate here is where the 50% level is. Now, the 50% level is around that 1175 mark. Now, we're currently trading at 1234. 1234 or 1235 is a major price point I know a lot of traders were looking at today, and we closed basically right at that price point. Closing right at the low of the day is not a promising sign, but not breaking that support level is a good thing. But this is just to keep in mind where this 50% retracement level is. It's much lower than where we currently are, about 60 odd points. So keep that in mind. I am currently looking for a reversal. Whether we get it or not is another story. One thing I do want to show you in the daily chart of the S&P is this trend line that the market's been working real hard. If we start off the high right back here, we come through to the low, and we put that trend line right in through there. We see we get the high here, which was a resistance. We break above, and that becomes support. Swing low as a support, another low swing low as a support, another low swing low as support. Then we break down through what was once a support trend line becomes a resistance trend line. Now we break back up. Look where we closed today, right on that trend line. So this is going to be interesting tomorrow to see whether we can actually provide support at that trend line again. My expectation would be to pierce this trend line and then close back at or above that trend line tomorrow to see if we have any strength of that trend line or in this market at this current time. Next one I want to take you through is my favorite, NDX. This is where I want to find strength in the market. This is where I want to find money flow coming into our big tech companies. Tukey, our moderator in the forums, brought this to my attention. He brought quite a bit of this information for the video tonight to my attention. So we got the down leg here. He said, hey, we got a head and shoulders formation, and I absolutely agree. Left shoulder here, head right here, right shoulder coming through, and then today, okay, we didn't break out like we should have a head and shoulders formation. We did come down. Does not say that the formation is deleted or not going to work out just yet. We need more data. This can come all the way down, find the support before going back up, and we still have a head and shoulders formation. We'll see what takes place tomorrow. That's the NDX. Now, this chart here, this chop coming through here is ugly. But if we break this down to a weekly chart, see where we've been closing on a weekly basis, this is interesting. Look at the long lower shadows coming through for the last 3 weeks. That's indication of buying pressure coming back into this market late in the week. So if we had the big leg down, then we're coming back up. Now this could give us another big leg down, couldn't it? And we tested the low back here, March in 2008. That's possible. Other thing I'd like to look at would be potential double bottom formation. Now today, this week's candle has 1 day of information, so it's still a very young candle. But if we can hold this support level through this around this 1800 mark by the end of the week, I'd be definitely looking for a double bottom formation to the upside, if not earlier than this week. We may have a long lower shadow and close above that 1850 area this week. That'd be nice. Bank index. This is our financial index of the NASDAQ. Traders on FTV know I use this as an intraday market internal. It is my favorite. Now we can see here, looking again at Fibonacci retracements, we have completed a 38% retracement on the bank. So I will be looking for buying pressure to come in here. Now we could pierce, come down to 50 and close back above 38. That'd be a beautiful thing. If not, look for a doji here or potentially going straight up from here. Again, this is just data. We need more information as it comes through. We can then judge and make assessments. In this current market environment, you have to trade hour by hour. We really can't take a daily chart and say, hey, we got the probability of this taking place, because as news events hit, things change. This is another pick of Tukey's here, and he did a phenomenal job on this one. He brought Apple to my attention. He said, breakout, you've got to check out the Fibonacci's on this. And I said, sure. You got to show our traders on FTV what I've picked up here. So Tukey said, check out the low from February, run your Fibonacci's to the high in May, and you will witness we have a 50% retracement of that big up move there. So this is promising. We've got quite a few stocks right on the Fibonacci levels, support levels, if you will, that could reverse and go back up. Again, this could pierce that 50% and then close above by day's end. What we'll see tomorrow could be interesting. Wednesday could be the day that we move to the upside. Take this market as it takes place, and as that data comes in, consume it, spit it back out, and make your judgments and trade. Be very, very careful in high volatility markets. Please make sure you're always using risk management. It is the only survival tool in this market. Major part of risk management, stop losses. Thanks for attending freetradingvideos.com. Until next time, breakout out.